A major advantage that candlestick investors have is that they have some very simple rules based upon trends. And one of those simple rules is that as long as you do not see a candlestick reversal signal and a close above the T line, you're still in a downtrend. When you add stochastics to that analysis, and you can see the stochastics are still in a downtrend, that even on days where you have a positive open, you have to say to yourself, is this the reversal, or is this just an up morning and a downtrend? Well, when you add the fact that your stochastics are still heading down, they're not in the oversold area, that you haven't yet closed above the T line, you just have to be a little bit patient, because the basic rule that you're in a downtrend until you close above the T line is still has still not been accomplished. That you just got to sit and wait and see if the morning selling, or I'm sorry, the morning buying is going to continue into the afternoon. This still makes even individual stocks a much better analysis case, where when you see a pop-up but do not see a close above the T line, you still have to assume you're in a downtrend. This chart is Avis, that we've had a downtrend ever since the dojis and the close below the T line, telling us this downtrend will continue, even though we see some pop-ups. When we see pop-ups right to the T line, that should give you a very clear indication of what to do. If you're short the position, you just give it a couple minutes to see whether they're taking it up through the T line or whether the T line is acting as a continued resistance level. Live cattle had that same scenario, except we were getting to the stage where we could see that it was bottoming. We were in a downtrend, but the trajectory had leveled out, and we were seeing dojis in the oversold area. Today, as soon as it gapped open, especially after a hammer signal, back up above the T line, that told us there was a completely different investor sentiment occurring at this point. So this one has been bought with the anticipation we could come right back up into the congestion area, which would make a good trade getting in from this level. The signals and patterns allow the investors candlestick investors to use little nuances that occur with each signal, such as the doji. We know it's going to open or trade in the direction of how they open it the next day, or that a downtrend remains in progress as long as it cannot close above the T line. These simple little trading rules helps an investor maintain positions versus being shaken out of them just because there was a short-term change of direction in the market. That'll be it. We'll see you in the chat rooms.